Let's pull back the curtain on something that moves trillions of dollars every single day, the stock exchange. Now, I know it looks incredibly complex, but what if I told you it's all driven by a few simple and very human ideas? Let's break down how this whole thing really works.
To really get it, you gotta think about it this way. The stock exchange isn't some building anymore. It's a vast, global city that literally never sleeps. And its traffic? It isn't cars, it's billions of dollars. The street signs are just endless streams of data. This is the place where companies and investors meet, all without ever shaking a single hand.
So, what's the engine that drives this non-stop city? Well, it all comes down to a constant conflict, a kind of great tug-of-war that acts as the very heartbeat of the entire market.
See, on one side of the rope, you've got the buyers. They look at a company, they see potential, and they say, I want to own a piece of that future. But on the other side, you've got the sellers. Maybe they think the price has hit its peak, or hey, maybe they just need the cash. This constant push and pull, this fundamental disagreement that's fueled by hope and fear, that is what moves the stock's price all day long. And really, it all boils down to the most basic rule in the book: supply and demand. If more people are lining up to buy a stock than to sell it, the price gets pulled up. And if more people are rushing for the exits to sell than there are buyers waiting, well, the price falls. That's it. That is the fundamental physics of the market.
Okay, so we've got our buyers and our sellers. But in this huge digital city, how do they actually find each other? It's time to look at how the match actually gets made.
You know, every single trade involves three key players. First, there's the investor. That's you. But you can't just call up the New York Stock Exchange and place an order. You need a gateway, and that gateway is your broker. They're the ones who take your order and send it into the exchange, that massive, high-tech system that actually finds a match for your trade.
And the journey of your order? It is unbelievably fast. You place it with your broker online, and bam, that instruction is zapped across the network electronically. From there, powerful servers and lightning-fast algorithms scan for a match, and the exchange's system finds someone on the other side who's willing to sell at your price. The whole thing happens faster than you can blink, literally.
But wait, for this whole system to work, for trillions of dollars to move around based on digital promises, there has to be trust, right? And that trust is built on two unseen pillars, the essential rules of the game.
The first pillar is something called liquidity. It sounds super technical, but the idea is actually pretty simple. Are there enough buyers and sellers hanging around the market at any given moment? Is there always going to be someone there to take the other side of your trade?
And why does this matter so much? Well, with high liquidity, trades are smooth. You can buy or sell without causing a huge ripple in the price. But in a market with low liquidity, even a small order can cause a massive, sharp jump or a sudden drop in the price, which makes things volatile and super risky. Liquidity, you could say, is the oil that keeps the whole machine running smoothly.
And if liquidity is the oil, then the second pillar, regulation, is the market's discipline. This is the set of rules and the oversight designed to make sure the game is played fairly and that everybody is on a level playing field. So what do these regulators actually do? Think of them as the market police. They're hunting for illegal insider trading, they're forcing companies to be transparent about their finances, and they're stopping anyone from trying to manipulate the system. At the end of the day, their entire job is to build investor trust, because without that trust, people wouldn't risk their money and the entire system would just crumble.
So we've looked at the mechanics of a single trade. But what happens when you have millions of these trades happening every second? What does it all mean for the bigger picture? Let's zoom out and take the market's pulse to see what it all means for the entire economy.
We do this using a tool you've definitely heard of, a market index, like the S&P 500 or the Dow Jones. The best way to think about an index is like a thermometer. It doesn't measure every single stock out there, but by tracking a carefully chosen group of big, important companies, it gives us a really good read on the market's overall health and, more importantly, its confidence.
So what is that thermometer telling us? Well, a rising index, that green bar going up, it signals a healthy investment climate. It says confidence is high. A falling index, on the other hand, is a bit of a warning sign. It tells us that confidence is shaking, and investors are starting to get nervous about what's coming next.
And this is so crucial to understand, because the stock exchange is way more than just a place to trade stocks. It is a living, breathing system with deep roots that are absolutely vital to the health of our entire modern economy.
Think about it. This is where companies go to raise the money they need to grow, to build new factories, to create jobs. It's where regular investors can earn returns to build a future, to save for retirement or pay for college. Governments collect tax revenue from all this activity. It's the engine that lets capital flow freely, allowing the whole economy to breathe.
You see, every single trade tells a tiny story, a story of hope, a moment of caution, a bet on what tomorrow will bring. And when you put millions of those individual stories together, they form the very pulse of modern finance.
So the stock exchange isn't just some machine for making money. It's a mirror, reflecting our collective hopes and fears about the future, all told in the simple language of buyers and sellers. And that story is being written and rewritten every single second. So the only question left is, what story will you tell?